Popular 401k funds are crowded with some of the most popular, and right now, most volatile names in tech. The top three funds are loaded with tech names like Facebook, Amazon, Apple, Alphabet, the parent company of Google, and their Vanguard, Wellington, Fidelity, Contrafund, and the Fidelity Growth Company. What does it mean for you? Ken Mahoney, CEO of Mahoney Asset Management, joins us now to discuss this. Ken, good to see you. Let's put this in perspective. Over the year, tech is up about 18%, but we have completed earlier this week the biggest two-day slide in tech of the year. How concerned should people be about how much they're invested in tech in their 401ks?
I think they should be concerned. Look, the FANG stocks, Facebook, Amazon, Netflix, Google, been very kind to shareholders. Most consumers, we use these services every day. So it feels kind of crowded. It seems like everybody's in these leadership names because the leadership, quite frankly, is pretty narrow, right? So what we really want to do is start looking at these portfolios and really start diversifying. Look what's happened in the last few days. As you said, last 2 days, even last Friday, when at one point the NASDAQ was down 172 points. There seems to be a rotation. So most investors may stay into this party too long. So they may want to also rotate, much like the money managers rotating, into some other investments that gives better diversification.
Ken, but these are mutual funds. And it's worth noting that there are lots of other stocks, when you think about something like the Fidelity 500 index, that are included here. So how should you think about it in that context?
So in that context, a lot of investors and 401k investors, have these different funds and different choices. And most people kind of, they go through and click to see the best 5-year return and just click, 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 and not looking what's inside those portfolios. Again, the S&P 500 is well diversified. I get that. But there's a lot of other funds that are really concentrated in these FANG-like stocks or technology-like stocks, because that's where the action is. And money managers kind of drift over there too. So it's kind of like money managers drift to where the hot spot is, and investors also kind of drift also where performance is. So I think I'm sorry.
So, well, Ken, I'm just wondering then, are there some other stocks, other tech stocks that are getting overlooked here because there's so much focus on the FANG stocks? When you look at the 74% of the tech sector stocks are outperforming in the marketplace now. Where should people be looking if they want to invest in tech but without some of the volatility?
Yeah, investors could look at some PE ratios, again, try to simplify. I mean, those are not spending too much for it, but the old technology, Microsoft, Intel, they still have great earnings. Yes, in a strong market, you may not get the full upside, but in a down market, investors are going to cling to those that have better PE ratios or, better ratios as far as value is concerned.
All right, and what's your best advice about how much we should spend, how much should be allotted to tech in our 401k?
Probably maybe 20, 25%. Any more than that, you're really overly concentrated, overly weighting that area. Because right now, again, it's high volatility, as you mentioned. If the market goes higher, you're gonna get the biggest bang for your buck. But if we do correct, and there's some feeling here, you may have a little correction here with everything that's going on. These are the names that are gonna come down first.
Ken Mahoney with Mahoney Asset Management. Ken, thanks.
Okay.